Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've been working on a jailbreak. Keep it calm with the fast pace. Any moment till the day breaks. No more time to get to know you. On a jailbreak, got no time for a new fate. Any moment they'll replace me. Should have tried to get to know you. I've been working on my timing. Insecurity beside me, but your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm ever gonna wake up. Now I'm living in a dream. Now I'm living in a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've I've been working on a jailbreak. Keep it calm with the fast pace. Any moment till the day breaks. No more time to get to know you. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. See, I've been working on a jailbreak. Got no time for a new fate. Any moment they'll replace me. Should have tried to get to know you. I've been working on my timing. Insecurity beside me. But your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. Mama, it's a jailbreak. It's a jailbreak. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. It's a jailbreak. It's a jailbreak. See, I've been working on a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've been working on a jailbreak. Keep it calm with the fast pace. Any moment till the day breaks. No more time to get to know replace me. Should have tried to get to know you. I've been working on my timing. Insecurity beside me, but your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. Mama, it's a jailbreak. It's a jailbreak. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. See, I've been working on a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've been working on a jailbreak. Keep it calm with the fast pace. Any moment till the day breaks. No more time to get to know you. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. See, I've been working on a jailbreak. Got no time for a new fate. Any moment they'll replace me. Should have tried to get to know you. I've been working on my timing. Insecurity beside me, but your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. Mama, it's a jailbreak. It's a jailbreak. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. It's a jailbreak. It's a jailbreak. See, I've been working on a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've been working on a jailbreak. Keep it calm with the fast pace. Any moment till the day breaks. No more time to get to know you. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. See, I've been working on a jailbreak. Got no time for a new fate. Any moment they'll replace me. Should have tried to get to know you. I've been working on my timing. Insecurity beside me, but your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've been working on a jailbreak. Keep it calm with the fast pace. Any moment till the day breaks. No more time to get to know you. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm ever gonna wake up. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm ever gonna wake up. See, I've been working on a jailbreak. Got no time for a new fate. Any moment they'll replace me. Should have tried to get to know you. I've been working on my timing. Insecurity beside me. But your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm ever gonna wake up. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm ever gonna wake up. Mama, it's a jailbreak. It's a jailbreak. Mama, it's a jailbreak. It's a jailbreak. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm ever gonna wake up. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm ever gonna wake up. Mama, it's a jailbreak. It's a jailbreak. See, I've been working on a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. time to get to know you. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm ever gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm ever gonna wake up. See, I've been working on a jailbreak. Got no time for a new fate. Any moment they'll replace me. Should have tried to get to know you. I've been working on my timing. Insecurity beside me, but your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm ever gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm ever gonna wake up. Mama, it's a jailbreak. It's a jailbreak. Mama, it's a jailbreak. It's a jailbreak. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm ever gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm ever gonna wake up. Mama, it's a jailbreak. It's a jailbreak. See, I've been working on a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've been working on a jailbreak. Keep it calm with the fast pace. Any moment till the day breaks. No more time to get to know you. Now I'm living in a dream. Now I'm living in a dream, replacement. Should have tried to get to know you. I've been working on my timing. Insecurity beside me, but your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. Mama, it's a jailbreak. It's a jailbreak. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. See, I've been working on a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've been working on a jailbreak. Keep it calm with the fast pace. Any moment till the day breaks. No more time to get to know you. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. See, I've been working on a jailbreak. Got no time for a new fate. Any moment they'll replace me. Should have tried to get to know you. I've been working on my timing. Insecurity beside me, but your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream, and I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak.
Bienvenue au code de fiscalité. S'il vous plaît, faites le son de vos appareils électroniques. Désirez-vous que j'effectue la lecture des consignes en anglais ou en français? English or French?
English, yeah.
English. Each team has 20 minutes to present its case to the judges. I will show report for the 10, 5, last 2 minutes, and last 30 seconds of the presentation. During the last 10 seconds of the speech, I will indicate by means of my two hands the number of remaining seconds. A team not having ended its presentation after 20 minutes will be stopped to move on to the period of questions. A period of questions of a maximal duration of 5 minutes is assigned to the jury at the end of the presentation. I'd like to remind to the jury that it's mandatory to ask at least one question during this period. I will invite the judges to introduce themselves and then the team can begin.
Pierre-Luc Lafontaine, I'm an accountant at IG Private Wealth.
Bonjour, Benjamin Lompré, je suis fiscaliste chez Demirel.
Bonjour Marc-Antoine Ray, je suis CFA et directeur régional de groupe Investor.
Jean Paquin, comptable agréé, gestion privée, groupe Investors.
Merci. No one likes paying taxes. In fact, many people work a few days a week just to pay their taxes. However, with efficient and proper tax planning, these amounts can be reduced drastically. And that means more money in your pocket at the end of the day. Good afternoon. These are my colleagues Lucy and Tahira, and my name is Amin. We are Desharnais and Associates. Today, we are here to address your concerns with regards to the acquisition of Porte et Fenêtre McShane, all while keeping your tax consequences to a minimum amount. We will begin by addressing the corporate tax issues, followed by the personal tax issues, and end off by giving our recommendations and other considerations. So before we take a step forward, let's stop and look at where we stand today. Currently, Mr. McShane owns 100% of the common shares of Porte et Fenêtre McShane, PFM. However, he has decided that he wants to sell his share in the company in order that to Jesse, you. And you will have 90% of the company, and Mr. McShane will have 10%. We'd like to note here that we will not be considering this an acquisition of control, as you, Jesse, are a key employee. My colleague Tahira will go into more details about that in a few minutes. So let's start off by talking about the corporate tax issues. So the first thing we're going to look at is the fact that Mr. McShane mentioned to you that he wanted to have the least tax consequences possible when he sells you the 90%. Now, if PFM qualifies as a qualified small business corporation, QSBC, Mr. McShane will be able to sell his shares and get up to $813,600 on a tax-free basis. Now, in order for a company to qualify as a QSBC, there are several criteria that have to be met. And these criteria are noted in section 110.6, subsection 1 of the Income Tax Act. And let's look at these criteria now. The first one is that it has to be a Canadian Controlled Private Corporation, a CCPC, which PFM is. The second one is that no unrelated party should have owned the shares in the last 2 years, which is the case because Mr. McShane owned all the shares. The third criteria is that at the time of the sale of the asset, of the shares, at least 90% of the fair market value of the assets should have been used to earn active business income. And then the last criteria is that at least 50% of the assets should have been used to earn active business income in the last 2 years. And let's go into more detail about that. So for 2015, we looked it up for you and we found out that only 81% of your assets were used to earn active business income. Therefore, you do not Mr. McShane would not qualify for this lifetime capital gain deduction of $813,600. However, there is an easy way out of this, and that is purification. So if the company sells its shares and sells its investments and pays off liabilities with the cash that it gets from the sales, they will be able to meet the 90% threshold, and Mr. McShane will be able to get his lifetime capital gains of a deduction of $813,600. And now looking at the last criteria, that in the last 2 years at least 50% had to be used. In 2014, 90% was used, and that's way above the 50% threshold. And assuming that in 2013 it was approximately the same, Mr. McShane will be eligible for the lifetime capital gain deduction of $813,600 on the sale of his assets. Now let's look at the second corporate tax implication, and that is investment tax credit. As a manufacturing company, they may engage sometimes in research and development. Now, if they engage in research and development, they will be eligible, the company would be eligible for what is known as investment tax credit. An investment tax credit for the first $3 million, you would get, the company would get an investment tax credit of 35% and 100% refund. And anything above $3 million would be at a rate of a 15% investment tax credit and a 40% refund. Now, it's important to note that the first $3 million may be reduced and writing down, but that depends on what your taxable income earned in Canada is. Now, let's look at the manufacturing processing credit, the M&P credit. So in Canada, majority of the companies right off the bat pay a tax of 38%. However, there are certain initiatives that the government and the Canada Revenue Agency have put in place that allows for these corporations to have a reduced tax rate. And that is, let's talk about the manufacturing and processing credit. So because they engage in manufacturing activities, they would be eligible of a 13% deduction on their manufacturing and processing profits. However, now in Canada, the Canada Revenue Agency has also introduced the general rate reduction, which is also 13%. And it's much easier for a company to account for this and claim this than the manufacturing and processing credit. And you can only claim one or the other. So what we recommend here is just claim the general rate reduction, the GRR, right off the bat and forget about the manufacturing and processing credit. Now, you also mentioned that there was a purchase of a building, and this building was renovated and made into a factory. Now, because this building was purchased and there was renovations, the cost of the renovations will be added to the adjusted cost base of the building, and that is the ACB. Now, for tax purposes in Canada, is known as capital cost allowance. Now, capital cost allowance will put this item into a separate class, and depending on how this asset will be used, you can claim up to 10% CCA in the first year in Class 1. Now, let's look at a few administrative issues we would like to mention to you, and that is first that Mr. McShane mentioned to you that he was scared of getting dividends from the companies because of the tax consequences. Now, in the information provided to us, we saw that there was a balance in a capital dividends account of $72,000. Now, any amount in the capital dividend account can be paid to shareholders tax-free. So Mr. McShane can get this amount of $72,000 tax-free. The second thing we're going to look at is the refundable dividend tax on hand. We recommend paying 3 times the refundable tax on hand as a dividend, which gives $45,000. This would allow it to get the maximum dividend refund of $15,000. Now, we were not provided the information on whether the company had any balance in their general rate income pool. However, if they do, these amounts can be paid out as eligible, and the shareholders would gross these amounts up by 38% and would be eligible for a 6/11 gross up. Now, as the company has been profitable for several years, And assuming that the company would have at least a tax payable of $3,000 in the current year, and at least $3,000 in one of the 2 preceding years, the company would be required to pay installments to the Canada Revenue Agency. This would allow them to this would prevent them from getting any interest and penalties assessed on the tax that is due. So now, when you gave us the financial statements of the company, there were a few items that you were not sure how to account for or how they were used. Now, the first note you mentioned to us was the travel expenses. Now, this was the travel expenses for all your sales employees who were traveling for business. Now, the reason that this is 100% deductible is because it relates to traveling, and it's a business expense. Therefore, it is 100% deductible. The second one is the employee meals. You said you provided the employee meals to your employees for approximately $5,000 per meal. Now, this would be 50% deductible for tax purposes. You refund your employees the company refunds the employees for any education that they do regarding the invoices that improve the invoice process of the company. Now, these are deductible for you as a corporation because it relates to the business of invoicing and it improves the productivity of the company. And they will not be taxed in the hands of the employees as a benefit because it relates to the job that they are doing. The last thing we're going to talk about right now is the car benefit. Now, you provided your production manager with a car. Now, this car is over $30,000. And for tax purposes, because it's over $30,000, tax depreciation CCA rules require that this car be placed in a separate class known as class 10.1. Now, this car, the employee uses for both personal use and for work-related use. Because it is used 500 kilometers for personal use and 2,500 kilometers for work-related use, the employee will have to include a certain amount in his individual tax return. He will have to include a standby charge of $3,239, and because he uses the car for more than 50% work-related use, he would have to include operating cost benefit, which is the lesser of 2 things, and here $135 would be the lesser. So therefore, he would have to include $3,374 in his individual tax return. Now my colleague Lucy will go into more details about the personal tax issues.
Okay, so actually before going into the recommendation of the company, we'll first go over some of the issues. We saw that your husband has employment right now and you make most of the money. So what we recommend is to pay him a reasonable salary that will be deductible for the company and that the earned income will allow him to contribute to his RRSP. Also, you can pay a dividend up to this amount, and since you have a CA account, you will be able to receive those. The company will be able to receive them tax-free. Also, so Jesse, you can contribute, or you can also contribute to Nick's RSP. You can also make a loan to your husband, and you can also pay all the family expense so that he will retain all of his income that he may use for investment purposes that will be taxed at a lower rate. So what we recommend here is to pay out a mix of dividend and salary. Then there are some credits that are available to you, such as spousal amount, the family tax cut, but you need to be aware of income attribution and when you give Nick's the money. Also, there's also a possibility, since you have 2 children, there's a possibility of registered education saving plans. We can go more into details if you're interested into the question and period answer later. For post-secondary, since you have children, they have tuition, textbook, education, and also travel to school for public classes credits. Now, we saw that you have a mortgage interest. Mortgage interest is not deductible for personal taxes, so there is some way that you can change it. Also, allowable business investment laws. We saw that you may have the potential to realize those laws. We can go over this. Also, investment for interest and broker fees, they are deductible against your tax payable. So now we'll go into the recommendations for the business.
Okay, so for the recommendations, your mother wanted to basically fund the purchase of the company for you. So we went over some different methods of funding. So first, your mother recommended that she can give you 20% as a donation. Unfortunately, that will not be deductible for tax purposes because you are basically giving a gift to your daughter, and it will be deemed to be given at fair market value, so there will be immediate tax consequences on that portion. The 80% interest-bearing loan, Jessie will have to make interest payments within 30 days of the year end, and you will have to have a prescribed rate to ensure that you will not have to include an interest benefit in income. So from what we saw, this is not the best option, so we had some other options that we looked at as well. So for the mother Catalina, she can sell her shares in Catalina Beauty to get the funds to fund her daughter and make a personal loan. However, Catalina informed us, your mother informed us that she does not want to sell her business, so this is not a viable option. Another thing that you can do is, your mother can do, is that she can give you a loan through her company. So what will happen is this will result in a 15-2 shareholder loan because you are related to your mother. So in order for the shareholder loan not to be included in your income, there has to be some terms that have to be met. So first of all, you have to be receiving this loan because you are an employee and not a shareholder of the corporation. And also you have to be using the loan to either buy a house, buy a car for work purposes, or to buy shares in Catalina Beauty. And unfortunately, you're not using these funds to do any of these three things. So you would have to include the full amount of the loan into your income, and you would have to pay taxes on that as well. So unfortunately, this is not a viable option because you will have higher tax consequences in the end. Another option that you can do is that your mother's company can actually acquire the shares of PFM. This will result in an acquisition of control because she will be buying 90% of the company. PFM will have a deemed year end. So what that means is that will count as a taxation year. So PFM does have some loss carry forwards. They will lose an additional year for the loss carry forwards for the non-capital losses. Normally they can be carried forward for 20 years and carried back 3 years, so there would be a year lost here. The net capital losses that they have, the net capital loss balance that they have will not be able to be carried forward because there is an acquisition of control. Those losses are lost after the acquisition of control is completed. So also you would have to involve Mr. Moore, which is your mother's partner, and he said he doesn't want he doesn't want to deal with that company whatsoever, and he owns 50% of Catalina Beauty. So unfortunately this option is also not viable. So we've looked at different ways that Mr. McShane will be able to transfer the company over to yourself. So there could be an outright immediate gift. He can just basically give you the shares himself. What will happen is it'll be deemed to be disposed of at fair market value, and there will be immediate tax consequences as well. So this option we decided is not viable. There's also installment sales where you can make installment sales to the company, and you can make installment sales. You can make installment sales to the company, and then from there, you would be able to defer the tax consequences on the capital gains because they would be able to defer it every year. They would only be making the payments every few years. However, you cannot defer the tax consequences on recapture if there is any. That will have to be included in JFM's income, and they will have to pay taxes on that as well. So because of that, as well, Jessie will require the funds, of course, to pay the installment loan payments. So for this reason, we also said installment sales is not a viable option. Also, there's a third option which you can do an 85 rollover. So what you would do is you would roll over the shares into a holdco, and then Jessie will become Jessie will then subscribe to the shares in the holdco, and then she will have 90% of the shares in JFM. This we said was not viable because you have to create another company, and then you also have to be aware of potential deemed dividends, income attribution, as well as potential kiddie tax. The only good thing about the 85 rollover is that it can allow for crystallization of the lifetime capital gain deduction. However, this has been allowed for a number of years. The lifetime capital gains deduction has only been increasing, so we do not see that this credit will be removed in the future anytime soon. So there's also two other options. There's a trust. There will be immediate tax consequences because you transfer over the shares at fair market value. And it's normally created for estate planning, which we will discuss a little bit later. There's also the 86 reorganization, which is a great way to bring a key employee into the company. So because the 86 reorganization can be done with very minimal tax consequences, we have decided to do a combination of an 86 reorganization as well as a trust in order to get you into the company. So we will now go over the tax consequences of that. So how to do an 86 reorganization. So the first step will be for Mr. McShane to exchange 100% of his common shares for preferred shares. What he would do is he will take consideration. We didn't have the fair market value of the company, so we did not make an estimate. However, you would take a boot, which is a note payable, which is going to be equal to the paid up capital of PFM. This will be equal to $10,000 to ensure that you will not have an 84.3 deemed dividend on the redemption of your shares when you are doing the reorganization. When you have the fair market value, if you provide us with that information, the fair market value minus the boot consideration will be equal to the legal stated capital of your preferred shares. So the preferred shares that Mr. McShane will be receiving, in order so that he can maintain a little bit of control in the company, because he said that he did want to see the company grow and have a position in the company as well. These dividends will have to be, it will be dividend bearing, so he can receive income. It will be voting, so he can have control. It will be redeemable and retractable and have a price adjustment clause, just in case the CRA contests the legal stated capital of the shares. So the shares will also be non-participating, so that you will be able to have control and run the company. So the value of preferred shares, as I mentioned, will be frozen at the legal stated capital. This will be the redemption value of the shares in the future when you sell them, if you decide to sell them in the future. What will happen is you'll be able to take your lifetime capital gain deduction at that time once you sell those shares. So the next thing will be to open a new class of common shares, and they will have no value when the class is first opened. So they can be transferred to you at a nominal value. What we recommend, because you have children and Mr. McShane also has children, we recommend to create a trust. So what we recommend is for Mr. McShane to put the 10% of the shares into the trust so that he can make his children the beneficiaries and he could do some estate planning. For you, because you have 3 young children, we suggest that you can put 30% of the shares into the trust so that each of your children will have 10% each, and then the growth of the common shares will be attributed to them. The trust will be inter vivos and discretionary. Inter vivos because you're still living. Upon death, it will become testamentary. It'll be discretionary so that both you and Mr. McShane can make changes to your beneficiaries at any time. So the trust will be taxed at 29%. You must file a T3 return. There's a deemed disposal every 21 years, so we do suggest that you remove the assets from the trust before the 21-year period. All the beneficiaries will be eligible for the lifetime capital gain deduction, but you should also be aware of income attribution of 74.1 and the potential kiddie tax for the grandchildren. So this is what the trust will look like. We can go over that in the in the question period. We have other considerations as well we can go over later.
The presentation is now over.
Yeah, so thank you very much for your time. We're now looking for
At first, in the beginning of the slide, you said that there were no acquisition of control since the share were acquired by key employee, and then you said later that they were one.
So the acquisition of control, what we were saying is that in the beginning we were not going to consider an acquisition of control because we decided to do an 86 reorg instead. For the acquisition of control, that would be a situation where we said that your mother would be able to buy the shares in JFM for you, and that would be deemed an acquisition of control. So that's what we meant, the 2 differences there. Sorry, that wasn't clear.
I guess a lot has to be said about the structure, and you had to go real fast. So
Yes.
maybe you can use this time if you want to take some more time to explain how you would plug in the trust with the holdco or management code.
Okay, yeah, I'll show you the design that we have here. Okay, so basically for the trust, what we suggest for you to do, because you have 3 young children, is that you can place the 90% of the common share, well, we suggest 30%, so that your children will each get 10 and 10 and 10, because they're all minors right now. So you can place 30% of the shares at this moment into the trust. The future growth of the common shares will be attributed to the beneficiaries, and what will happen is you will keep 60% of that, and so you're doing estate planning at the same time, so that's why we suggested to do the trust as well.
Is there any multiplication for the LPG CD?
Sorry?
So it can be you will have the full amount for each of the children.
Full amount.
Yeah.
Okay, thank you.
Do you have to pay something to the children when you declare the gain?
Yeah, so that's why we said for income attribution, if you have them as beneficiaries in the trust, they may receive dividends because of they're the beneficiaries of the shares. So we said because they're minors, there may be income attribution that you do have to take into consideration.
Okay. And at what age you can start giving them some dividend?
When they're more than 18.
More than 18. At the slide 24, you said that the loan was between the old co owned by Catalina to the unco to the what is the name of the girl?
Jessie?
Jessie, yeah. To the old co of Jessie, and you said that there will be shareholder loan, the application of 15.2. How come there's shareholder advantage? Sorry, I'm searching for my word in English for that one. Do you understand French?
Oui,
Ok, parfait. Bon.
on va répondre en anglais.
Merci.
parce que c'est-
Non, mais c'est en anglais, c'est en anglais. Pas une
Merci.
anglais, je cherche mes
Merci.
termes juste en anglais.
Ok, pas de problème.
Il y a un prêt entre la société de gestion de la mère qui est fait à la société de gestion de la fille. Vous voulez me dire que parce que le prêt est fait entre personnes liées, il y aurait un avantage à l'actionnaire qui découle de ça. C'est ça, j'ai bien compris. J'aimerais que vous abordiez un petit peu ça, que vous me l'expliquiez un petit peu d'où ça provient votre conclusion.
Yeah, so the shareholder loan would be from the mother's company directly to the daughter. So because the daughter and the mother are related, there will be a shareholder loan between the two. So that's why we said it has to meet these criteria in order for the daughter to not include the full amount of income. Yeah.
Can you give some more detail about the kiddie tax?
Yeah, so for the kiddie tax, what happens, because you have minor children, what happens is if they receive income, they're not supposed to be receiving income under a certain age. So what will happen is the income will be attributed back to you and you will be taxed at the maximum rate, 29% on that income.
Si j'ai bien compris, Monsieur McShane, il y a juste des actions privilégiées après la légalisation.
Il va avoir un 10% de...
D'actions. Ok.
Oui, c'est ça, les deux.
Le fait de procéder ainsi, M. McShane, dans le fond, quand il fait la vente, il va être racheté progressivement. Dans le cas où ce qui est racheté progressivement, il conserve son risque. Comment vous avez l'intention de vendre ça à quelqu'un qui a l'intention de vendre sa compagnie? C'est pourquoi qu'on ne vendrait pas tout de suite 90% des actions, puis il reste juste 10% de risque, puis il prend son argent. Je veux savoir pourquoi vous avez envisagé de faire un gel, puis après ça, racheter progressivement.
J'ai pas vraiment compris. Pour
Ok.
faire un gel du...
Vous avez fait un remaniement du capital à l'action, vous
Ouais.
avez mis les actions privilégiées à monsieur, puis par la suite, lui, sa somme de prix de vente, ce que je présuppose, vous allez racheter ses actions.
Time question, the period question.
We'll give it time just because of the language barrier.
Okay, yeah, sorry.
Je suis d'accord avec ça.
Okay.
Vous allez racheter les actions,
Ouais.
puis vous allez payer progressivement le monsieur. Dans le cas, moi, je viendrais vendre ma compagnie, il faudrait vous me le justifier, ça que je conserverais le risque en voulant dire est-ce qu'on va être apte à me payer, est-ce que le fait que l'autre personne fasse la gestion avec 90% des
Ok.
votes.
Okay,
La question, c'est en lien avec ça, c'est comment vous me le justifierez si ça serait moi le vendeur.
Okay, so what we did is we did an 86 reorganization. So Mr. McShane actually has 100% of the common shares, and he has of the preferred shares, and 10% of the common shares. So for you yourself, Jesse, you only have 90% of the shares, so he still has control. His shares will be voted so that he will be able to make decisions in the company. So that's why you will still be able to maintain control in your company after the sale, after the reorganization. Yeah.